Hello everyone, and thank you for joining us here at xm.com. You're watching the midweek technical analysis video. I'm Cristina Barthenido, investment analyst, and at this video I'll present you my analysis on pound dollar, euro yen, and gold. There are a couple of important data releases in the calendar, including the US GDP and core PCE inflation data, as well as the Bank of Japan's rate decision tomorrow. So there are a couple of important events that might still cause strong volatility in markets. So looking first at pound dollar, this has been a great performance so far this week, especially thanks to the rebound within the 1.2320, 1.2345 trend line zone. The pair is currently testing the important 1.25 territory where the price found support during the previous months. The 20-day exponential moving average is also under examination, so that area will remain in focus, especially as the RSI over here has yet to climb above its 50 neutral mark, and the stochastic oscillator is already very close to its 80 overbought level. So there's potential for a downside correction, but if upside pressures persist above the 20-day exponential moving average, we may see another battle between 1.2560 and 1.2585, where the 50 and 200-day moving exponential moving averages are placed. This is also where the upper band of this bullish channel is located, so I would like to see close above that region in order to target the next resistance around 1.2650. Higher than that, another critical territory could be the 1.27 and 1.2730 region, where the resistance trend line from May 2021 is located. Now, in the event of a downside correction, well, I would pay attention to the 1.2420 mark, where the price found support earlier this week. Below that, all the attention will turn back to the 1.2320, 1.2345 region, a break of which could drive us into the 1.2260, 1.22 constraining zone last seen from September to November 2023. And now turning to euro yen, this is another great performer this week. It has reached a new 16-year high of 166.97 earlier today. But looking at the price, it's currently testing this important resistance trend line from January at 167. If we extend, well, a stricter line coming from January is also placed near the 167.45. So that territory will be closely watched in the coming sessions, especially as the RSI, the stochastic oscillators over here, signal overbought conditions. If the price surpasses that wall, then we may see another significant rally up to 170, while higher than that, I expect a tougher battle to take place between these resistance lines coming from March and June 2023, seen currently between 171 and 171.80. In the event of if upside pressures fade soon, we may see a pullback to 165.15. The 20 and 50-day simple moving averages could be also important to watch. Those are currently seen around 164.30, 163.35. This support trend line coming from December 2023 might be critical. Perhaps a break below that might trigger a faster decline to 161.45, 161.90. And finally, looking at gold, this is another interesting market to watch, and that's because despite gold pulling below its record high of 2,431, the 20-day exponential moving average managed to provide strong support this week. So that increases the risk for an upside correction. despite the downward pattern in the technical indicators over here. Nevertheless, the stochastic oscillator is already within the oversold territory, so I wouldn't rule out a bullish breakout, especially if the price manages to close above the 23.6% Fibonacci tracement of this uplook over here, seen around 2,325. A break above that could take us up to the 2,400 level, while above that the price may attempt to reach this constraining line from 2022 low, seen around 2,450 at the moment. If that proves an easy obstacle, then the rally could head for the 2,500 psychological mark. Now, in the event downside pressures return with the price closing below this short-term constraining line at 2,298, that would cause additional losses towards this lower support trend line around 2,245, while the 38.2% Fibonacci level of 2,260 could also be constraining. Nevertheless, if the sell-off continues below this territory, breaking the 50-day exponential moving average as well, then the attention will turn to the 2,200 psychological mark, while below that, the steeper decline may also attempt to reach the 61.8% Fibonacci of 2,154. So that's my analysis for today. That's everything I wanted to share with you guys. Thank you for watching, and see you next time. Bye bye for now.